The agency float ratio is focused on the broker's financial management, and it's specifically about insurance receivables, which is collecting premium payments from customers, and insurance payables, which is passing those premiums along to the carrier. And this is if you're doing agency billing. That is, you're the one who's collecting premiums from the customer on behalf of the carrier and then passing them along, as opposed to direct billing when the carrier collects from the insured. And in that time period between when you've collected the premiums and when you need to pass them along to the carrier, you can invest those premiums in a short-term, safe investment and generate a return. And that's called float, and it's a way to make that little bit of investment income if you can hang on to that money even for a small amount of time. But you obviously have to manage this very carefully so that you can liquidate the invested assets back into cash to then pass that along to the carrier in plenty of time. So as an example, if you had $100 of payables and $50 of receivables, that means you've got a positive float of $50. And I can invest that $50 and generate a little return in an interest-bearing savings account or in a CD or whatever it might be, and make a small amount of income over that short term before I then pass the premium to the carrier. The next ratio that we'll talk about is a liquidity ratio, the trust ratio. And this is getting to the relationship between the agency and the carrier when the broker is doing agency billing again. And we talked in the float ratio about how you can make a short-term return between payables and receivables, but that time is obviously not unlimited, and eventually you obviously have to pass the premiums along to the carrier. The trust ratio shows whether you have the assets to pay those payables to the carrier. Do you have enough short-term assets like cash, investments, and receivables that you could liquidate or turn into cash so that you can pass that amount along to the carrier, which is the accounts payable insurance amount? This is a really important metric from the carrier's perspective, and you want the trust ratio to be above 1. As an example, let's say that you have $100 of cash plus investments plus accounts receivable from your insurance customers. And say that you also have $50 of payables that you owe to carriers that you need to pass along to them. That means that you would have a trust ratio of 2.